Hey traders, as in trader land, inflation is at a 2-year low. VIX fears down to a 3-year low. Let's get after it. Starting here at the VIX, this is the weekly chart. We're looking at weekly charts right now. If you look at the VIX, we have gone down, 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 and down. Last time we were down this low was around February 2020, right before the big COVID drop. And when we had that, we had a major spike when that took place. That was way back here. If you look over here on the weekly chart, you can see the last time we were here is right there. And then COVID fear spikes higher. Again, weekly chart on the fear indicator. We're going to go to the spiders. We have been up, 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 and away. Very, very, very strong. But here's what I want to share with you. This rubber band has gone up, 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 up. And now we have a MACD up here. See, this is a centered oscillator, MACD. If you look at this, it's still going straight up. But look at this. If I hover my crosshairs over this, last time we got near this area, like right here, we dropped. The last time we got into this area right here, we dropped. The last time we got in this area, we really dropped. Okay, back here we got into this area and we went into a nice downtrend. We're in that area right now and on increased volume, guys. Usually it's a telltale sign of it wanting to reverse. The other thing I want to share with you, and if you look at this, is the RSI, the relative strength indicator. Anything in the purple band down here is relatively normal, but anything above this area, like you see how we start to get up here in the white area there, when that happens, big downtrend. And we're there now. We're definitely in the white area there. If I bring in more data, you can see we got there, big downtrend. Anytime we got into the white area here, we had a big drop. Like if I were to blow this up, let me just show it to you here. This is a weekly chart. Blow this up, bring this down. Do you see how we got up here in the white area? As soon as we did, big drop. Got up here in the white area, 2 weeks of droppage. Okay, so when you get up here to this area, this is called the overbought area. We're way in the overbought area right now. So the question you want to be asking yourself, are you going to be finding more sellers up here, or more buyers up here at this level? So be thinking about that when you're making your decisions. And so that's where we're at. If you go to the Qs, though, something I want to share with you. If you go to the Qs, it also is relatively very high. Again, look how high we are on the centered oscillator MACD. Come over. Last time we got not even near that area. See this here? Big drop. Here, not even close to that area. A bigger drop. Again, this is a weekly chart. Got up here to this area. Big drop. What's interesting is we're higher. I don't know when the last time we've ever been this high in a relative. We have never been this high, guys, in many, many, many years. Many years. This might be the highest I've seen the MACD actually on the weekly. Wow, that is crazy. Look how much over the purple we are right now on the relative strength. And anytime we got up here in the white area, big downtrend. This white area, a month or two of droppage. You see what I'm saying here? This white area, we just looked at that one. We got in this white area and it just chopped around, but it was too bullish. We stayed up there in the white area. If it gets in the white area and stays, it can stay bullish. It's when it gets in the white area and then crosses back into the purple, it gets really bad. But we are really high on RSI. I mean, really, really high. Really, really high. But let's look at the S&P, kind of get a lie on this. You see how we had this big triangle, we had this triangle and then breakout, okay? I want you to be remembering the relative strength here. So be thinking about how strong this run is. Now look at the Qs, okay? And let's look at how strong this run has been going up and on an increased volume here, which could be a topping issue that we're dealing with. But watch this. I'm going to go to small caps because small caps can be leading the charge one direction or the other. And let's find out what small caps are doing. Small caps weekly chart. Look how we're not seeing the same relative run. So the S&P went up, the NASDAQ went up. Everybody went up. But who didn't go up? Small caps. So Russell's 2000. Now, in the symmetrical triangle, it broke above last week the moving averages, but we stubbed our toe, or we hit our head rather, on the upper trend line. This week we broke above it, so that's relatively strong. So that's good to see. But the problem is, relatively speaking, against the S&P versus the NASDAQ, we're not seeing the same strength. Okay, so what are the financials doing? XLF. What's the financials doing? If the financials are rock solid and running straight up, then the markets has the chance and has the legs to keep going. If it's relatively weak, then there's no underlying strength keeping the markets afloat or any reason why the markets could keep going higher. Let's take a look at it, weekly chart. And it looks pitiful too. We don't have the big run up like the S&P. We don't have the big run up like the NASDAQ. Instead, we have a drop and a bear flag. Do you guys see it? Bear flag. Go to freeonlinetradingeducation.com, freeonlinetradingeducation.com. Look at bear flags and say, do you see it? Down leg, flag waving in the wind. It's big symmetrical triangle, caught up in the moving averages. The price action is in the lower part of this triangle. Do you see this? It's not in the upper part of the triangle, which would be X% more bullish, but it's in the lower part of the triangle. If in fact next week starts to drop, next few weeks start to drop, look for the remainder of the summer to be really bearish, guys. So again, this is financials weekly chart. The MACD is rallied up right to the zero line. You can see we're at the zero line right now. And if that zero line acts as resistance, we get up here to this, like right here. See, we go up to the zero line. Do you guys see this? Up to the zero line. We go up to the zero line, and then we crash and burn. We get up just over the zero line, and then comes back down. We go up, and then crash and burn. So this is up to the zero line. This would be a great place to see crash and burn. That would be a really good place to see that if it's going to happen. U.S. dollar broke a major trend line, guys. Come on, populate here. Big weekly trend line, support now broken. We have all sorts of problems taking place with the U.S. dollar and its status as far as the world reserve is concerned. We're seeing chinks in the armor, which is no bueno, no good. And quick look here at gold. Last 3 weeks, gold should have rallied with the weakness of the dollar. We're not seeing this. We had the big bearish divergence, said watch out, and we did drop. Now we're building a low base on a major support level. If we go below the 20-week moving average, guys, it could get hairy and fast. We could see another big drop. However, if it can stay above this trend line, just catch its breath here and then rally back north, that would be good for gold. Silver, if you take a look at silver, we have a nice bull pullback, and a pop to the upside here right off a support line. It should do that, but it needs to stay above this support line, needs to stay above that blue 20-week moving average to be good. And quick look at Bitcoin. If you look here, this is a rally up, a nice bull pullback with a hammer. Very bullish setup right now. Very bullish setup. Ethereum has a lot of issues it's dealing with, and but nonetheless, it's looking really bullish. Up. It's hit its head at resistance. A nice bull pullback. If it breaks this resistance, look for Ethereum to rally too. Let's get into some talks, guys. So here is some very interesting things. If you like to read short blogs and just received something from Amazon. I'm here in my humble abode here in Tampa, but there is a major event taking place, a showdown taking place in the crypto market. Guys, I'm telling you right now, the crypto market, we have the U.S. government. There's this thing called Operation Choke Point 2.0. It's basically the assumed aggression that the U.S. is taking against cryptocurrency, with the assumption that they're going to come out with its own CBDC. What is that? It's just a U.S. dollar being digitized. What does that mean? You've heard of cryptocurrency. It's the US dollar now being a cryptocurrency. That's what the US is driving towards. And what's fascinating with this is the US doesn't want to lose its world reserve status, and because it doesn't want to do that, it sees anything of competition as an enemy. So we're seeing aggression against all major banks who were crypto friendly, such as Signature, such as Silicon Bank, Silvergate. There are multiple banks that were very bullish and friendly towards crypto that have failed now because the government did not do anything to safeguard them when they could have. And then we're seeing aggression towards Binance US and Coinbase itself. And what the most fascinating part is, BlackRock this past week, guys, BlackRock, the largest asset manager in the world, trillions of dollars, came out and said, we want to have a Bitcoin ETF, and propose and sent the SEC. They're wanting a ETF for Bitcoin, but they want spot ETF. What does that mean? It is directly associated with Bitcoin itself. What does that mean to you and me? All that means is we now, if we want to have some exposure to Bitcoin, we don't have to go and find a digital exchange to do our bidding on, our trading on. We don't have to set up a digital wallet to hold our stuff. All the little complexities of being able to do cryptocurrency gets washed away magically, because we can buy spot Bitcoin through an exchange traded fund through BlackRock. That's what they're hoping for. Grayscale has already come out to do it, and they got turned down. And now Greystone just launched a lawsuit against the SEC saying, man, you turned us down, but you're looking at maybe doing it with these guys. So there's all sorts of stuff taking place here. So if the U.S. government is setting up a digital currency to contend and to compete and to secure its status with the world reserve, if that's the case, and it's seeing Bitcoin, Ethereum, and any other digital currency as an enemy or as a competitor that needs to dwarf, and then you have a behemoth like BlackRock coming in and saying, we want to be the group to do this. Now, the fascinating part on this is they still need a custodian. And guess who they're choosing? BlackRock's choosing for their custodian? Coinbase. The very one the SEC has just sued them and Binance US, acting as brokers when they're exchanges, and it's crazy the aggression the U.S. government's doing towards this. And to add another twist, I'm in Florida. Our governor DeSantis is about to strike and write it down. Is going to put a signature down. I think it's either going to be, I think in July it's going to be legal or illegal to have or to utilize CBDC. So if the U.S. says we're going to digitize and the U.S. dollar now is digital, Florida has already made it illegal, or is getting ready to pass to make it illegal to do that. Why is he doing that? Safeguarding freedoms. As soon as the government has the ability to digitize their currency, they can see all transactions that you make. Not only can they see all transactions, they can stop transactions if they don't agree with you politically, religiously, or any other thing. So the freedoms that we lose here in the U.S. are significant, and that's why people are pushing against it. However, the irony of the whole thing is, if we don't digitize, we will start to lose our status that much faster for the world reserve, and that's a problem for us here in the U.S. So it's a dichotomy. It's a weird, complex thing taking place, and it's happening right before our eyes. We get to watch it in real time. Read my blog. I just wrote it. It's very comprehensive and but easy to understand. I have several blogs now. Go to LinkedIn and read them. Go to Grok Trade and read them. They're easy reads. I try to make it where anybody can consume these and learn from them. Read the one with the digital dilemma. Read the last 3 or 4 blogs and you will be up to date with the latest of what's happening out there. That is something I have done for you. Share those blogs with other people so people stay alert and in the know with relative and this is information that is happening right now. It's the freshest information you can get. So that is it. If this is your first time or you haven't done so yet and you like this level of education and information and you don't want to lose it, make sure you subscribe. Don't miss this by not subscribing. Just make sure you subscribe so at least you have the option to unsubscribe later if you don't like the content. But I promise you, if you liked what you received here, you're going to like what you're going to receive tomorrow. So at least give me a like, guys. It doesn't cost you anything to hit the like button. If you could do that for me, thank you so much. And guys, we have a class coming up. If you want to, something I should say this, guys. We are in the future here. Give us some time. It's not happening overnight here. But we're going to start doing micro webinars. And they're going to be education with a small fee associated. We're not trying to get rich off of this. But because it's straight education on technical analysis, fundamental analysis, psychological market analysis, in different aspects of technical analysis. Because we're going to do that, we're going to do these micro webinars and we're going to start doing these fairly regularly, and everybody can jump in for a few bucks and be a part of this and really have information that you can take home with you. And I think everyone will benefit from that. Let me know in the comments if that is something that you're interested in, because if I get a lot of people saying I'm really interested in the micro webinars, then if I get a bunch of those, I will make these happen much faster, because right now it's conceptual. But if I get there's like everybody, like for example, if I were to say, hey, we're going to do a micro webinar on how to trade the best high base breakouts and low base breakouts, how to find them, which ones to take, which ones not to take, what we're looking for, where we place our orders when we do find them. Or we do one on bull pullbacks. We do another one on wedges and how to play trend reversals. And so hypothetically, if I said, hey, we're going to do, like one of my favorites on falling wedges is we're going to show you how to properly identify a falling wedge. We're going to show and talk about how to go and identify them on different time frames. And then once we do, how to put our trend lines in. And once we get our trend lines put in, we find out where would be ideal areas to enter those when we do locate and find those in our own trading, right? So none of these will be talking about individual securities. We won't be telling anybody what securities to buy and or sell. Education only, and only looking at charts themselves. So that's what we're looking at the micro webinars. Throw in a few bucks, be a part of this, and highly educational. So let me know if you're interested in that. Give me a thumbs up. Take care, guys. We'll see you later. Bye. Guys, why are you still here? You're supposed to be gone while I still have you. If you haven't joined the 301 mentorship yet, seriously give that some serious thought. Mark the Meerkat's been trading a long time in the markets. As you know, I have too. We take people under our wing and we teach you what we do to trade in the live markets. We trade a significant amount of money on a day-to-day basis in the live markets ourselves. If you're going to learn from anybody, learn from us. It's the 301 mentorship program. We've been doing this a long time, and we're happy to help you. There you have it. Now, get out of here.